Wait, are we live? I think we are live. I think we are live. I think we are live. This is the first. If you're watching this, this is the first Ask Me Anything on Halal Investing Network. Excuse the bit of a mess here and there. This is, my little office here. We'll figure out the green screen. We'll figure out the virtual background so it gets nice and cleaned up. And if you can see us, drop us a comment below. Let us know what's happening. Let us know if it's coming across clear, whether you can hear me, whether everything's all good. Let's see. Do we see any comments? All right. I think we are good. Awesome. So today it is the first Ask Me Anything on the Halal Investing Network. I'm so excited to do this, and we're doing it just for you. Now, if you do have any questions, do drop it in the comments below so that I can see it, and I'll try my best to answer. We are on for at least the next half an hour, 1 hour. Let's see, whichever happens. I want to apologize for a slight mess here. Can't hide it with a virtual background. I haven't figured that bit out, but hey, it's the first time for everything. So, for those of you out there who send me some of the questions, I have a few answers lined up for you. And those of you who are tuning in, let me know your questions in the comments. We're doing this simply because I honestly believe that we can empower you through education, and we want to empower our Muslim community with halal investing. I mean, ultimately, we all know that we want to invest. We know that we need to grow our money, but why? Right? That's one question that always comes on. Why do we want to grow our money? Another one, of course, that always comes about is how do we start? And so, let me introduce myself a little bit. For those of you who don't know me, my name is Afiq. I am Chief Finance Ninja at Fuss-Free Finance. Right, I'm a chartered financial consultant. I've been in the finance industry almost 10 years now. I am also the co-founder, director at iFinancial Education Private Limited, one of the partners here at Halal Investing Network, together with my two others. And if you can hear screaming in the background, that's probably my children. Can't be anyone else. Yeah, you can hear them. And so, Today is super exciting. I want to start with the first question that we got from our viewers. One of our was, what do I need to do before I start investing? So, before you start investing, so many questions, so many things to do before you actually start investing. And here at Fuss-Free Finance, one of the biggest things I talk about is before you even start taking action, you got to understand a few things. Number one, we are today at point A. We're at point A, right? Regardless, like it or not, time will go and we'll hit point B. Whether or not you are ready for point B, it's going to arrive. And so, we want to equip ourselves to be, arrive at point B in the best possible state, the best possible condition. Now, point B may look like different things for different people, but the first step is to think about what your point B looks like. It could be it could be retirement. It could be having a amount of money to put your kids through university. Commonly, these are the two I always hear. I want to grow my money so that I have enough to retire at this particular point in time, and there's enough to put my kids through uni, for example. Right? And so, item number one, figure out what's your point B. Item number two is always have a step-by-step plan to get you to point B, and that's where people like myself come in. People like myself who are advisors, who are proper planners, who really focus on getting you to point B without any products. Right, so figure out your strategy, your plan, how to get to point B. Then you look for the right investments, the products and services to support that plan. And so now to answer your question, what do we need to do? What was the exact question? What do I need to do before I start investing? 3 simple steps. Figure out point B. Figure out how long you're going to get there. Figure out your amount of money to put in. from there you can figure out how you're going to start investing. So let's let's make an example out of it. I am today 37. Okay, my late 30s, oh my god. Right, 37, I want to retire in 20 years at age 57. So now I have point B, which is retirement in 20 years. So I've got that. So now let's figure out how much I need to put aside. And so when we think about that, you'll start to realize that maybe, if I were to do, say, $100 a month to invest, that equates to $1,200 in a year. Over 20 years, that's only $24,000. Is that going to be enough for me to retire? Even if, let's say, my money grows at 6% per annum. It's definitely not enough. And so what you need to do before you start investing really is to look hard into your numbers, your rate of return, and figure out how much you need to put in every month to be able to achieve your point B. And so have a good long conversation with yourself, with your spouse. Sit down, talk about what does point B look like. Where do I want to go and by when? Once you have these two answers, then you'll be able to figure out how to start investing. Because then you know you have a goal in mind. And once you have a goal in mind, you can start to plan. And once you have that plan, you can take action. And now let's look at what kind of action you can take, right? What kind of action you can take. And which very nicely goes into question number 2, which is how can I start investing? Now, how to start investing isn't that difficult. It isn't that difficult. It really is just, find a brokerage account, right? Take some money, throw into some random stocks, and hope for the best. Okay, my wife is just going, bye. And so, to answer your question, how can I start investing? How can I start investing? I'm kidding, by the way. Don't just open any random brokerage account, take some money and toss it at random stocks. No, just don't do that. That's really actually quite bad. What you want to do is you want to be able to say, I want to invest in a methodical manner, in a way that I don't have to put in a lot of thinking brain power. I know that given enough time, I'll get to my destination. Now, here in Fast Free Finance and the Halal Investing Network, I use something called the Halal Investing Formula, which is HALAL. Halal. H is for habitual investing, A is for allocate correctly, L is looking for opportunities, A is annual review, and L is long term. And now, what does that actually mean? Now, we do share a lot about this in our workshops. We do share about it in our one-to-one sessions. And if you do need help with this, drop us a text, drop us a message. We'll be more than happy to get in touch with you and say, hey, are we still live? Okay, we're fine. We're fine. So back to the HALAL. What you want to start doing is, once you know from the first question what you need to do before you start investing, once you know that you have a target, point B, right? You have a point B target, and you have a time horizon, you can then decide on the instruments you want to use. Frankly, I'm the guy who will tell you to do unit trusts and ETFs, as you can see on the background here. Where is it? There you go. On the background here. There you go. Right? The list of ETFs and unit trusts, right? Why? Why do I believe in ETFs and unit trusts and not actually trading, buying stocks and all that? So, if you can hear, that's Adam. He probably is, So why do we want to do unit trusts and ETFs instead of straight stocks? So here's the thing. In terms of risk, right? Straight stocks, individual stocks, have one of the highest risk profiles out there, and ETFs and unit trusts generally have a lower risk profile. Now, between the three of us in the Halal Investing Network, you have myself, Adi, and Zayed. I am the guy who will tell you about passive, effortless investing, the kind of things that you can fire and forget and still get there. Adi will tell you how to trade in a halal way and make that active trading profitable for you. And so hopefully we can get Adi on board for an Ask Me Anything in the future, inshallah. And for me today, I'm going to tell you this. If you want to go to point B and you know your time horizon about 20 years, ETFs, especially the right ETFs, can return you on average 6 to 12% per annum. That's 6 to 12% per annum. Now, take out any financial calculator. I've got one here. I like to use the app on my phone, which is called Financial Calculator, right? And so you take your time value of money calculator, you key in, present value is zero. Okay? Future value, say for example, I want to retire with $1 million, right? $1 million. 1, 2, 3, 1, 2, 3. So that's $1 million in future value. And like I said, a good ETF that's properly diversified, especially when it comes to stocks. Okay, we'll share a little bit more later on. Let's say it gives us about 6% per annum. That's not too bad, 6% per annum, right? And then you'll have periods. And periods is the number of months. And so look at it this way, months. Remember H, habitual investing? I'll go a bit deeper into that. And so 20 years, how many months is that? 1 year is 12 months, 10 years is 120 months, 20 years is 240 months. There you go. So 240 months. Now when you do this, you just hit solve for payment, PMT, and it'll tell you that you need to invest just under $2,200 a month at an annual rate of 6% per annum, and in 20 years time, you'll have $1 million. So that's what you need to do. So that's a strategy, that's a plan. Now this plan and strategy does come with some caveats, which you need to understand before you actually pull the trigger and start. And so my role today is really to just help you along the way. There's so much to go into, and so today's AMA is just to answer some really burning questions and, well, quite frankly, bring up even more questions after I'm done. Let me see. I'm trying to figure this out. I can't see the comments on I can't see the comments on the Facebook Live. Okay, I saw one comment, fantastic. Lena Saleh says yes, that's awesome. Let us know all the only questions that you have. I will be doing this for at least the next 20 minutes online. So if you do share the link, share the post to as many people as you can so that we can get all the questions. Today, the questions are, ask me anything about investing. I've already gotten 3 really interesting questions that I can answer. The first question was, what do I need to do before I start investing? And to recap, for those of you who are just tuning in, think of a point B, where you want to go, and think of how long it's going to take for you to get there. Now, if you hear a meowing sound, that's Sadie, my cat. She's trapped in the room with me. She's trying to get out because it's almost lunchtime. And so, first question is, what do I need to do before I start investing? Think of a point B. What is your goal? That's your point B. And by when? How long? From there, you can decide what kind of instrument you want to buy into. Of course, I would say this, folks, I have seen and done so much damage control with people coming to me with their portfolios. And one of the biggest things I hear is this. Their bankers, insurance agents who sell them their products tend to allocate wrongly. Like, for example, I've seen so common that people who have been investing for the past 10 years, for the past 12 years, 15 years, and I look at their portfolio and it's full of bonds. It's all just fixed income, which is great, it's safe, it's stable, but it doesn't grow. Now, the reason why I bring this up is that if you know your time horizon that's long, right? If you know your time horizon is long, you can take on more risk with equities, stocks, ETFs and unit trusts, not just bonds. And here's the thing, one of the biggest things I see in terms of damage control is I see somebody holding a portfolio for the past 15 years and it's barely grown simply because it's mostly full of bonds. And so it goes back to my second A, which is allocate correctly. The first one was habitual investing, which is go it every month. And then the first A, is allocate correctly. And so if you're young and you have the next 20 years ahead, please, by all means, get some exposure to stocks, because that's the one that grows over time. Bonds, not really so much. Okay, that's it in a nutshell. And so, if you want to look at this, how can you start investing? What do you need to do before you start investing? How you can start investing? Like I said earlier, it can be as simple as opening any brokerage account and then just, tossing money at some random stock. Does that actually work? Studies have proven, not just shown, have proven 99% of the time traders will fail to make money. 99% of traders fail to make money. 87% of traders lose money. And that goes very nicely into the third question. And the third question I had was, should I be an active investor or a passive investor? Now let's talk about what the two things are. An active investor is someone who is, well, very active. They're on the ball, they're watching the markets, they're looking at their holdings, they're monitoring the movements, they're reading the news, they're trying to figure out what's the best thing to do at that particular time. Now, an active investor can have a short-term trading view, like say intraday. Within a day, they enter in the morning and they're done by the evening. They can be daily, day to day. They can be weekly. They can be monthly, quarterly. And as long as they're in it and they're actively monitoring, waiting for a position to go in or waiting to exit their positions, which get out and sell, that is being active. Very, very active. What's a passive investor? What's a passive investor? Now, this is very different from the term passive income, right? Passive income, I honestly hate that term. It's been thrown and used so much. But the passive investor really is this. He makes a solid decision based on a plan that he has, right? And so I am a passive investor. So my plan is to retire in 20 years with $1 million, and I have a rough plan. And so I think about it, okay, what kind of asset class can I go into? What kind of instrument or investment can I buy and I go into that does not require me to look at the news, be scared, try to figure things out, try to time the market here and there, and then fail. And so as a passive investor, I look for asset classes, I look for instruments which I know will appreciate over time. And for all you property guys out there, I know you're probably thinking, oh, Afiq's going to talk about property. No, I am honest. I'm based in Singapore. I do not like property as an asset class. It does not grow fast enough. There's way too much things involved into it. And so I'll make a stance right here. I will not invest in property. Obviously, I stay in my own house, so it's not an investment. It's a residential. I love this house. I'm going to stay here forever, inshallah. And of course, when we look at investing, I always look at being passive. Where is it? Where's the finger? There you go. ETFs and unit trusts. Why? Simply because when you pick the right ETF and the right unit trust, you don't have to trade it. You don't have to think about it because it doesn't make sense to trade because they don't move as wildly as stocks and shares. And from that perspective, you can start looking at this. If you buy before I go into what to buy, let's look at this. World economies have grown over time. For those of you, anybody older than 30, you would remember a few financial crises in the past 3 decades, right? Recently, we've got China's Black Monday, we've got global financial crisis, we've got Asian financial crisis, we've got dot-com bubble, we've got SARS, so many different crises, right? And if you pull up any chart of the world economy, the MSCI World Index, write this down. Look for the MSCI World Index. Look for the S&P 500. Look at the Dow Jones. Look at the NASDAQ. You would have noticed that regardless of how many, corrections and crises happen in the past 30 years, it would have started at the bottom and be way up top. It's a long-term uptrend. Now, here's the key: long-term. And if I'm going to be doing it for 20 years is a long term. I know that as long as I don't try to beat the market like a trader tries to do, right? A trader will try to beat the market all the time. If the market produces 6%, I'm going to beat that 6% and give me more than that. Well, like I said, 90%, 99% of traders fail to do that. And since I'm not a trader and I'm a passive investor, I know that I can buy the market instead of trying to beat the market. So here's the saying that I coined. If you can't beat the market, buy the entire market. And if you wait long enough, you know that the market will grow. And so, Folks, at the end of the day, if you're going to be a passive investor like me and you don't want to think about trading, you don't want to be stressed out about the kinds of stocks to buy, the news affecting us here and there, and be totally stressed out, and you want to be, like me, chill, having a cup of coffee, not today, it's Ramadan, chill, drinking a coffee, look at my portfolio and say, oh, okay, it's growing, yeah, we're fine, yeah. Then you want to start using ETFs and unit trusts. Now, which particular ETFs and unit trusts do you want? I've got a 2-page list of 4 ETFs and 4 unit trusts which are halal. Alhamdulillah, there are halal options out there for us, brothers and sisters. A good friend of mine likes to say, "Mashallah, brother." And so, look for this 2-page guide to the 8 ETFs and unit trusts you can purchase. Drop me a comment below if you want a copy. We'll send it to you direct. I believe we will be uploading this into the Halal Investing Network group, inshallah, soon. But if you want it fast, drop me a comment. Let me know that you want this 2-page guide on the lists of ETFs and unit trusts that you can buy that are halal. Now, the ETFs and the unit trusts that you purchase, of course, need to contain and follow the performance of the market, right? If you can't beat the market, buy the entire market. And if you don't want to buy individual parts to make up the entire market, you can buy a single ETF or a single unit trust to buy the entire market. Now that becomes so easy. Remember, HALAL. So H is habitual investing, do it every month. A is allocate correctly. If you're younger, you need to put more stocks into your portfolio. And in this case, you can use an ETF or a unit trust that purchases stocks. Right? The next L is look for opportunities. Now, as a passive investor, I just said just now, don't be trying to figure out what's happening in the market, whether you're doing the right thing, doing the wrong thing. When I say look for opportunities, if you look at the chart, inshallah, the next time I come online, you can see the chart. If you know that the market is trending downward, it is coming down in the short term. Like, for example, in March of 2020, there was a flash crash. Everything dropped for that short period of time, right? If you have some spare cash and you see that the market itself is down, don't you think that's an opportunity? Dump it in, put in some money, and hey, let it ride all the way up. And if you had done that at the bottom of the March 2020 crisis, the correction, you would be up and above by 100%, easily. And that's just buying the entire market, not even individual stocks. Right, so look for opportunities, folks. Now, the last 2, A and L, I'm going to keep it as a surprise for everybody watching, and I'm just gonna keep it quiet. So look out for our future videos before you start investing. Remember, we have the Halal 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 investing formula, which has been proven to work, and I use it personally, and I use it for all our fuss-free families out there who I am managing and helping. And if you're watching, thank you for all your support. Much love from me and my team. And so we're gonna go into the third question. I only have another 8 minutes left before we end today. So I've covered what do I need to do before I start investing, which is figure out your point B and how much time you have, and how can you start investing, folks. I believe it's super easy, especially if you're in Singapore or within the region. You can go through a bank, you can go through an online broker. Nowadays, all these brokers are so cheap, and so this is a bit of advice here. When you do want to consider your online brokerage firms, look at the market access, whether they have access to the US markets, which are very important, whether they have access to your local markets, and what kind of instruments they allow. Like, for example, some brokers let you buy stocks, some let you buy bonds, unit trusts, ETFs. So look at the platform, what their market access, number one. Number 2, you want to consider their fees. Their fees. So their fees are usually, they have brokerage fees, which is commission, and it's usually either a flat amount or a percentage, whichever comes first. Whichever is higher. So fees are very, very important. Some don't charge fees. Some charge fees for just buying. Some charge fees for buying and holding for you. So look at your fees. There's so many out there. I'm not going to be able to compare all. And if you want to know my personal preference, you have to drop us a comment and I'll tell you which is the platform I personally use. And so these are the 2 main things when you want to consider when you want to look for a brokerage platform: market access which also determines the instruments involved, as well as their fee structure, which is super important. Wait, let's see. Any more questions coming in? Right, I think I've pretty much answered. Okay, so the third question really is, what kind of investor should you be? Now, this very much depends on how you're wired. I am not wired to be a trader. I cannot look at the markets and the charts every day. I'll probably go crazy. I'm a passive investor. And so if you're the kind of guy like me who wants to sit down, have a cup of coffee, once in a while, look at his portfolio once a year, fire, forget, guarantee my retirement, then you're most definitely a passive investor. You know what's the best kind of investor to be? Neither active nor passive. Both. In the last 5 minutes, I'm going to share with you my secret. When you are investing, you got to have this. A core satellite portfolio. What exactly is it? My core portfolio is my portfolio of assets which are passive. I fire and forget. Every month I go in, I know it's going up bit by bit by bit. It's a diversified portfolio of stocks and bonds, and it just sits there and it just accepts the money I'm putting in, and it grows and grows and grows predictably over a long term. That's my core portfolio. Core. Then I also have my satellite portfolio. So the satellite portfolio is the second portfolio that I have, which I can be a little bit more tactical about, which I can be a little bit shorter term, a little bit riskier, based on what I know of the market, based on when I read the news. I can, for example, say I want to allocate a bit more money into gold. I can put some money into cryptocurrencies. I can find, a halal ETF or a halal stock, which I have strong conviction on after doing all my analysis and all that. And here's the thing to note, the satellite portfolio is money that you can bear to lose. So never ever only have a satellite portfolio. I have met people like that and it's so scary. Like they put in, okay, this is my portfolio, it's my satellite portfolio. I said, where's your core? No, I don't need a core, And then they lose all their money, which is sad. And then I quietly laugh in the background after telling you, no, you need a core portfolio. And so you need a core portfolio, and you must have both. But at the very minimum, you must have the core. Don't just do a satellite. So the core satellite portfolio is fantastic because your core portfolio gives you long-term predictable returns, and your satellite portfolio gives you higher returns, which will supercharge your overall return. And inshallah, we can all retire early. Isn't that what we want? The mantra we have at Fast Free Finance is this: I want to spend guilt-free, I'm going to live worry-free, and I'm going to retire early, inshallah. Okay, folks, so last 2-3 minutes, I am going to wrap up. I want to thank everybody here for watching. Thank you so much for your time and your energy. I absolutely love this. Let me know in the comments below what kind of topics and questions that you have, and I'll be doing an AMA, inshallah, every week. And we want to do this just for you. We are here to help our Muslim community, and even if you are non-Muslim, you are absolutely welcome to join. Somebody once asked me, Afiq, I'm not a Muslim. Can I take an Islamic loan? And I'm like, when we go and eat, is there a sign that says non-Muslims not allowed? Yesterday, me and my team, we went to Haja Mariam Cafe. It was fantastic. We had nasi ambeng, nasi padang. It was so good. And yeah, we saw some Chinese people, some Indian people, some Caucasian people, all eating together happily. Folks, just because something is halal doesn't mean you have to be Muslim to consume it. And so I absolutely encourage all our brothers and sisters out there, both Muslims, not non-Muslims, come and join our Halal Investing Network. Watch our videos, comment below, let us know what you want to know, and inshallah we'll help you. I will do my best to get our next our partner in for our next AMA, Adi. Hopefully if you're watching this, I want you in. We're going to be talking about active investing a little bit. Okay, so thank you once again, folks, because, well, quite frankly, I want to thank, my family, my kids, my wife for supporting me, my friends for pushing me to do this. But I think most importantly, I want to thank you. I want to thank you guys for watching. I want to thank you, our community, for contributing, because without you guys, it's literally just me talking to my cat. who's not here anymore. She's escaped, so now I'm alone and talking to myself. So this is Afiq, Chief Finance Ninja at Fuss Free Finance. I do this just for you. I'll see you at the next one. All my love.